A veteran analyst has flagged a potential turning point in Bitcoin's recent price action, citing an unusual pattern in institutional behavior. Over 9 consecutive days, institutions have been pulling money out of Bitcoin, marking the longest redemption streak for spot Bitcoin ETFs since their launch in January 2024. According to data from Bloomberg, these outflows have totaled around $2.8 billion from May 15 through May 28. This trend is significant because these ETFs were once considered a barometer for institutional confidence in Bitcoin, given their strong initial reception from Wall Street. The outflows come amid a broader period of price fatigue, with Bitcoin struggling to recover from a sharp decline that began on October 10 last year. While many might see these outflows as a sign of weakening demand, some analysts are interpreting them differently. Santiment Intelligence, a crypto analytics firm, has suggested that extreme ETF outflows could serve as a contrarian indicator. The firm argues that prices tend to move opposite to trader expectations during such events. In a May 29 post on X, Santiment Intelligence described the outflows as a potential signal that the market is nearing a local bottom. This view is shared by Michael van de Poppe, founder of MN Trading Capital, who has identified a key price level to watch. Van de Poppe noted that Bitcoin is currently trading near $71,226, with $71,000 as a pivotal level. If Bitcoin fails to hold above this level, he suggested that investors could look to buy at levels below $65,000. He also set a lower bound at $61,000, citing the 200-day moving. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Average as a historical floor that cycles have not typically breached. The 200-day moving average is often used as a technical indicator to assess long-term price trends. Van de Poppe's analysis suggests that if Bitcoin breaks below $71,000, the next major test will be whether it can hold above $61,000. This is a critical juncture because if Bitcoin continues to fall, it could signal a broader correction in the market. On the other hand, if it stabilizes near or above $71,000, it could indicate a shift in investor sentiment and a potential rebound. The current market environment is shaped by multiple factors, including institutional activity, technical indicators, and broader market sentiment. The recent outflows from Bitcoin ETFs suggest that institutional investors are reassessing their exposure to Bitcoin, possibly due to market volatility or broader macroeconomic conditions. However, the contrarian view is that such outflows may signal a shift in market dynamics, where patient investors see an opportunity to accumulate Bitcoin at lower prices. The next key signal will be whether Bitcoin can hold above $71,000. If it does, it could indicate a stabilization in the market. If it breaks below that level, it may trigger further selling pressure and a deeper correction. Investors will also be watching for any changes in institutional behavior, including whether the outflows from ETFs slow or reverse. These developments will provide further insight into Bitcoin's trajectory and the broader sentiment of the market. The stakes are high for both institutional and retail investors. If the market stabilizes, it could open the door for a new buying wave, particularly if macroeconomic conditions improve or if new regulatory developments provide clarity. On the flip side, a breakdown below key levels could lead to a broader sell-off, especially if macroeconomic headwinds persist. The next signal to watch for is not just the price action itself, but also the behavior of the ETFs. A reversal in outflows could be a sign that institutions are beginning to see value again. Alternatively, if the outflows continue, it may suggest that the market is still in a period of consolidation. The mechanism at play here is the psychological shift that often follows extreme market behavior. When institutional outflows reach a certain threshold, they can signal a shift in sentiment. In this case, the outflows have been extreme and prolonged, which could mean that the market is approaching a most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Turning point. The next signal will be whether Bitcoin can hold above $71,000. If it does, it could indicate a stabilization in the market. If it breaks below that level, it may trigger further selling pressure and a deeper correction. Investors will also be watching for any changes in institutional behavior, including whether the outflows from ETFs slow or reverse. These developments will provide further insight into Bitcoin's trajectory and the broader sentiment of the market. In the end, the market is always testing whether investors can remain patient and whether they can trust the signals that emerge from both price action and institutional behavior. The next few days and weeks could be pivotal in determining whether Bitcoin is setting up for a new rally or if it will face a deeper correction.